Hello, welcome back once again. This is Si Wing Yi. I do not want to beat up a dead horse, but I know in the past few weeks or even the past month, I have used several resources to go over the 2023 housing market predictions, such as Redfin, National Association of Realtors, CoreLogic, and Adams Research, and a few other mainstream websites. And so I promised myself not to do any more 2023 market projections, but well, I have to break that promise for one more time. I promise this is my last 2023 housing market prediction. The reason why I say this is because I've been contemplating. I want to use this resource. I want to use this. Goldman Sachs came out with their 2023 housing predictions, and for some reason, the last few weeks I forgot to mention them. I forgot to analyze what they're saying, and some of the things they are saying are it's interesting. I may or may not agree with it as always, but I want to give it a try to see what you guys think. Of course, throughout the presentation, throughout the video, I always provide my own personal opinion based on my 30 years of real estate investing experience in many different markets in the US. And also, I have taken thousands of real estate investors to buy investment properties throughout many parts of the country in the past several decades. Cash flow, turnkey, long-term buy and hold for mom and pop real estate investors buying remote, buying turnkey, wherever they live. Out of state investing. Anyway, without further ado, let's dive deep into this article by Goldman Sachs. And here we are. And basically, the title is, let me come down here, reveal 4 cities where house prices will fall the most since 2008 crash, which is, the drum roll please, San Jose, Austin, Phoenix, and San Diego could see valuations plunge 25% as property across the rest of the US dips, Goldman Sachs bonds. All right, let me say this. I'm not a doom and gloom guy. The sky is not falling. I don't use clickbait. I don't use sensational negative headlines, clickbait, those kind of situations. I just give you hardcore data trends based on my decades of experience. I'm very honest and very transparent in my analysis. So I just want to inform, I just want to leave you guys much educated, much informed. I do not want to mislead or provide misleading information and overhype any information like many YouTubers do out there for clickbait purposes to, it's too many. The YouTube channel is the wild, wild west. What can I say? It's all about fear porn, negative headline sales. So I get it. So everybody's a capitalist, and to a lesser extent, I am as well. But I'm a good capitalist, if that's such thing. All right, enough about my philosophy. Let's get back to the core of my video presentation. So getting back to this, Goldman Sachs issued a housing market forecast reported earlier this month, which is in January. This article was dated 24 January 2023. So the Fed's ongoing inflation battle, which sent mortgage rates from 3% earlier in 2022, the beginning of 2022, to a whopping 7% or 7.3% to be exact, around October 2022, has throttled the housing market and sparked the biggest price correction since the 2008 crash. Notice the words, I watched the words are being written very, very carefully. Sparked the biggest price correction. So my interpretation of this is it's only a price correction, not a housing crash. A housing crash could be anywhere from 40 to 50% drop. I'm not saying we're not going to get there, but my data and trends clearly does not see a crash. A correction, yes, more in some markets than others, and we will dive deeper into this article as to what Goldman Sachs are saying about it. So with that in mind, let's continue. Goldman warned investors in a research paper earlier this month's title, quote, getting worse before getting better, end quote. That housing markets were particularly overheated in the Southwest and Pacific coast. All right. So far, I pretty much agree with this assessment. While Goldman outlook for the national housing market is less dire, with prices seen dropping 6% this year before rate rising next year, certain cities could see sharp declines in home valuations. All right, let's hear more. Again, for more detail, oh, by the way, I live in San Francisco Bay Area. I lived here for 30 years. So I do understand the cyclical nature of California housing market. So I'm not overly surprised by this correction going on in the California markets. Very, very steep, correction, if you will. So namely, Goldman Sachs are picking on San Jose, Austin, Texas, Phoenix, Arizona, San Diego. They kind of forgot to mention Boise, Idaho. They kind of forgot to mention Las Vegas, Nevada, and few other sub-markets. I don't know. Okay, whatever. So to be stung with peak-to-trough declines of 25%, that would rival the 2708 global financial crisis, which saw housing prices plunge 27% nationwide. Believe me, I went through several housing cycles, crash and boom cycles, and I went through the 2008 housing cycle crash as well. So I know what's going on. Been there, done that. Okay, it's all about survival of the fittest. If you are a consumer, if you are investor, real estate investor, if you are a real estate buyer, it's all about the survival of the fittest. It's all about having a long-term perspective. It's always about buy. If you learn nothing else from this video from any of my YouTube channels, this philosophy bodes well. There's more wealth are being made through real estate than any other asset class over time, over the past 100 years, 1,000 years, 1 million years, whatever. That's the truth. That's the factual truth. If you, as a home buyer, real estate investor, all you have to do is buy and hold long term, at least 7 to 10 years to be fine. So Goldman Sachs housing price forecasts, if you see the graph, Seattle are projected to be minus 11.2%. Correction, San Francisco 13.7, San Diego 13.4, Las Vegas, okay, they mentioned Las Vegas, 11%, Phoenix 13%, Denver 11.5%, Chicago minus 1.5, Austin 15%, Tampa 11%, so forth and so on. Okay, so by the way, there are more than 500 metros in the US. There are more than 2,000 counties. There are more than 3,000 cities in the US. Real estate is local. Real estate market is local. LOCAL. Every neighborhood is different. Every house is different. There's no such thing as a national real estate. Another learning process for you guys. Okay, let's continue. In 2023, Goldman is forecasting double-digit home price declines in key markets like Austin, SF. Okay, we discussed that. All right, let's skip this. Austin dropped 10.4% from this 2022 peak house price, meaning its boom to bust decline could be north of 25%. as the trend continues into this year, 2023. Yeah, I somewhat agree with that. We'll see. Only time will tell. However, as I stated earlier, milder, milder price corrections are anticipated in the Northeast, Southeast, and Midwest. That means these neck of the woods in the other areas of the country should be doing a lot better. No double-digit correction declines. A modest gain, perhaps, in some of this market. Northeast, Southeast, and Midwest is humming along, if you will. Okay. So overall, Goldman forecasts U.S. house prices to fall 6% this year, 2023. Yeah, maybe not. Especially the West and the North, Pacific Northwest and the Southwest. Yes, that could be true. Think about it. Half of the country west of the Mississippi are, are going through a harsher housing correction, whereas the east of the Mississippi, which is the other 50% of the U.S., are doing pretty well. Does that make sense? Do you agree? All right, so we're almost concluding this. This national decline should be small enough to avoid a broad mortgage credit stress, all right, with sharp increase in foreclosures nationwide seeming unlikely, correct? Foreclosure rate right now is at a minuscule 1%, which is the lowest in historical record, okay? So for those of you hoping to get some massive foreclosure deals, well, you're in for a rude awakening. Oh, of course, only time will tell, but absent any extreme calamities in the world, economics, or job situation, absent that, I do not foresee things will really, really slowly turn around, especially South and Southeast. In some of my networks in the South and Southeast, my builders, developers, and my real estate teams in those markets, Florida and Texas mainly, they're seeing a slow uptick in activities in their neck of the markets, real estate markets. So we'll see. So Goldman is projecting an overall rise in housing prices of around 1% in 2024. Well, I think that's very, very pessimistic view. I think in certain metros, even in 2023, I see some good projections, good appreciation potential in certain submarket, which I know about. Very unique submarkets in certain part of the country. So anyway, assuming the economy remains on a path of a soft landing, avoiding a recession and a 30-year fixed rate mortgage rates fall back to 6.15% by year-end 2024, home price growth will likely shift from depreciation to below trend appreciation in 2024, the bank said. Mortgage rates remain unpredictable, peaking at 7.37% in November. Average 30% mortgage rate has fallen to 6.09% a few weeks ago in January 2023, after better than expected inflation numbers. So if inflation is subsiding, okay, is lowering, so which is a good sign. As you can see, throughout this past 2022, the interest rate at the beginning first quarter 2022 were at historical low, below 4%. Then skyrocketing of the interest rate began to happen around April, May, June, July, and it peaked around October at 7.3%, October the 20th. Then from October 20th, 2022 until now, the mortgage interest rate has been decreasing. So there's a lot of positive news going on. So who knows, the spring 2023 buying season is ramping up. There's a lot of people are potentially getting off the sideline. It is just my intuition. That's all I'm saying. So recent rate declines could give some home buyers new hope. So the The Federal Reserve may raise the central bank's borrowing rate another 3/4 of a point in 2023, which would be in a range of 5 to 5.25%. This is the central bank borrowing rate, the federal funds overseas rate. Rates for 30-year mortgage usually track the moves of the 10-year treasury yield, which lender uses as a guide to pricing loans. Okay, the movement of the 10-year treasury yield are followed by the mortgage rate, interest rate direction up or down. Right now, 10-year treasury yield is the critical component. All right, so here's my recap. All right, Goldman Sachs sort of a doom and gloom approach. Maybe they want to have some kind of a presence. Look, a lot of these companies, a lot of these websites, they make predictions. They want to market their services. They want to add customers, subscribers. They want to get famous. They want to get. So everybody have their motivation. Goldman Sachs are a capitalist company, just like any other capitalist company. They want to make more money by reporting, off the wall, negative headlines. They want to be a player in the housing market for whatever reason. So anyway, every organization have their motivation for reporting whatever they want to report. I mean, does it make them correct or wrong, whatever? I don't know. We live in a capitalist country. Everybody have an opinion. They could be right, they could be wrong. No one have a crystal ball. But I just thought, Goldman Sachs is part of the Wall Street community. Over many years, they have this credibility. They have, they have those smart MBA graduate from Harvard, Stanford, or MIT or whatever come to Wall Street and work, and they do this analytical things, and they enter the housing market and just put in their 2 cents for whatever it is. But I wouldn't take it with a grain of salt. It's just one more resource that you guys out there can ponder. So a lot of it, what they're saying, I don't particularly agree, but only time will tell. So at the end of the day, the takeaway is each one of you out there, whether you are a primary home buyer, whether you're a lease investor, to me, there's always an opportunity in any kind of crisis. So there's always opportunity for you to put your money in a good housing stock somewhere in some niche market. I do, turnkey, single family home, rental properties. So that's my niche, and people have different ways to make money in real estate. Anyway, so with that said, yeah, hope you enjoyed this video. If you see value, please smash the like button and subscribe to my YouTube channel. And also, the rest of you can subscribe to my email on my website below, so you can become our free member database of a real estate community, investing community. And by registering your email into my newsletter, you will receive weekly emails about real estate investment opportunities in different part of the country. Cash flow, turnkey, out-of-state, remote passive investing with property management in place. Thank you so much. This is Cyril Yi. I will see you on the next video shortly. Have a nice day. Bye-bye.